are my rising sun. You are my rising sun.
In the complex web of our modern economy lies a startling truth. Each unit of currency in your wallet is entwined with debt. This revelation may seem counterintuitive, yet it underpins our financial system's very foundation. In this economy, powered by debt, the creation of new debt is not an incidental outcome. It's the essential fuel propelling the economic machine forward. At the heart of this system is a process where banks, through issuing loans, generate new money. However, this money is not free of strings. It comes with the obligation of repayment plus interest. The additional money required to cover this interest doesn't initially exist. Every new loan is new money, meaning it doesn't come from someone else's savings. Banks create this new money through lending and therefore creating a situation where further debt is always needed. This cycle creates a scenario where debt consistently surpasses the actual money in circulation, leading to an ever-escalating accumulation of financial obligations. This dynamic is far from a mere oddity. It's the core mechanism of our financial operations. Every circulated dollar, euro, pound, or yen is essentially a unit representing someone's liability to another. Our entire financial system is interlaced with these debt-based transactions. While this facilitates economic progress and development, it also chains us to an unending loop of debt. And if you see now the puzzle in its complexity, you will notice that it's impossible to pay this debt back without ultimately collapsing the modern monetary system. In fact, this collapse nearly happened not too long ago, and I'm going to tell you how it all happened. Imagine a beach where all the banks in the world are united in one grand endeavor to build the largest sandcastle ever seen. This sandcastle represents our economy, intricate, majestic, and seemingly sturdy. But there's a catch. It's built on and maintained by the tide of debt. Now let's explore how this structure of sand is sustained and what could happen if the tide changes. In the ever-shifting sands of our economic beach, each grain represents a dollar in the vast expanse of our economy. Here, banks don't merely gather these grains, they conjure them into existence through loans, symbolizing the tide bringing in fresh sand. This process isn't about redistributing existing sand, but rather the ocean of debt brings forth new grains, each one a promise of repayment, a pledge that underlies every new unit of money. Visualize the economy as this sandcastle, with debt being the tide that brings in the sand. Each wave, gentle and timely, adds more sand, allowing the castle to grow and stay robust. But what if this tide were to suddenly recede and take away the sand or stop bringing in new sand altogether? This is akin to the rapid repayment or elimination of debt. The castle, our economy, would start to crumble without the continuous supply of sand, losing its structure and strength. Banks, the architects of this castle, rely not only on the steady arrival of the tide, but also on its predictable rhythm. They count on the gradual return of sand, the repayment of loans, to keep the structure stable. If everyone were to start repaying their loans too quickly, it would be like the tide pulling back too fast, eroding the base of our sandcastle unexpectedly and leaving it vulnerable. If debts were rapidly repaid or erased, it would mean a sudden retreat of the economic tide, pulling essential sand away. This would lead to a scarcity of the very material, money, that holds our economy together, possibly leading to a deflationary spiral and halting economic growth. Or in worst case, the sandcastle would collapse. This economic sandcastle almost collapsed in 2008. In fact, the financial crisis of 2007-2008 almost destroyed the economy in the world. In the years leading up to 2008, this sandcastle of the world economy reached unprecedented heights. The banks, driven by a blend of ambition and unbridled optimism, continued to expand the castle, not noticing or choosing to ignore that it was becoming unstable. The continuous flow of debt, like a gentle and reliable tide, encouraged this expansion, with loans being handed out more easily and invested in increasingly risky ventures, particularly in the housing market. This was the era of excess, where the size of the castle mattered more than its stability. Then came the fateful year of 2008. The once steady tide of debt and repayment that had helped the castle grow began to show its volatile nature. As the housing market crashed, the tide pulled back sharply, taking with it the grains of sand that had supported vast sections of the Sandcastle. Banks faced massive losses as mortgage defaults rose, and the once reliable flow of debt repayments slowed to a trickle, then stopped. Investors, sensing the danger, withdrew their support, akin to a receding tide leaving the castle exposed. The global Sandcastle, so magnificent in its size, was now on the brink of collapse. The rapid withdrawal of debt and credit was like a powerful wave crashing against its base. The financial institutions, the architects and builders of this castle, found themselves scrambling to save it from crumbling. Governments and central banks stepped in, trying to shore up the structure with emergency funding and bailouts, much like trying to rebuild a sandcastle as the tide violently shifts. This intervention by central banks was a desperate and necessary measure to inject liquidity into the system. By creating money on a scale never seen before, they aimed to stabilize the financial markets, restore confidence, and prevent a total economic collapse. Their actions, though controversial, were seen as vital for keeping the global sandcastle, our economy, from disintegrating into the sea. To illustrate the critical nature of the situation during the 2008 financial crisis, let's consider the account of Congressman Paul E. Kanjorski. At the time, Kanjorski served as the chairman of the House Financial Services Subcommittee on Capital Markets, Insurance, and Government-Sponsored Enterprises. His insights provide a stark view into the severity of the crisis. This is what he said during the C-SPAN interview. On Thursday, at about 11 o'clock in the morning, the Federal Reserve noticed a tremendous drawdown of money market accounts in the United States to the tune of $550 billion was being drawn out in a matter of an hour or two. The Treasury opened up its window to help. They pumped $105 billion into the system and quickly realized that they could not stem the tide. We were having an electronic run on the banks. They decided to close the operation, close down the money accounts, and announce a guarantee of $250,000 per account so that there wouldn't be further panic out there. And that's what actually happened. If they had not done that, their estimation was that by 2 o'clock that afternoon, $5.5 trillion would have been drawn out of the money market system of the United States, would have collapsed the entire economy of the United States, and within 24 hours the world economy would have collapsed. I will leave a link to the C-SPAN interview in the description. After the turmoil of 2008, the global economy embarked on a journey of reconstruction. Governments and financial institutions, acting as the emergency response team for our sandcastle, shored up the weakening structure with new policies and regulations. These measures aimed to ensure that the reckless lending and opaque financial practices that led to the collapse would not be repeated. For a time, it seemed as if the architects of our global economy had learned their lesson, building with a newfound respect for the delicate balance of the financial tides. As we observe the current economic landscape, it's like watching banks and central banks on the same beach, constructing a new, towering sandcastle. This sandcastle, representing our global economy, has been growing steadily, fueled by the same tides of debt and financial policy that shaped the pre-2008 era. But as the structure reaches new heights, there are echoes of past vulnerabilities resonating through its walls. In response to the challenges faced in recent years, notably the COVID-19 pandemic, central banks, akin to the ocean itself, have been churning out vast amounts of new sand. They've been creating money at unprecedented levels, far beyond the traditional tide bringing in grains of sand. This new sand, conjured from the depths of financial policy, was essential to prevent the sandcastle from collapsing during the economic storm brought on by the pandemic. Now, as the world economy attempts to stabilize, the central banks are facing a new challenge: the rising tide of inflation. This tide threatens to erode the value of the sandcastle's foundation, akin to the way high inflation erodes the value of money. The Federal Reserve and other central banks are responding by adjusting interest rates, attempting to temper this tide without causing the sandcastle to crumble. The current situation bears an uncanny resemblance to the period leading up to the 2008 crisis. Once again, we see the banks and central banks building up the economic sandcastle, but this time, they're more aware of the potential risks. The tide of debt remains a critical factor, but it's being watched with a wary eye. The fear is that if they're not careful, a sudden shift in economic conditions, like a rogue wave, could once again put the entire structure at risk.
Dripping honey sky, you are my rising sun.
As we stand on this economic beach, watching the new sandcastle rise, the lessons of 2008 loom large. The banks and central banks are attempting to balance growth with stability, but the question remains: have they learned enough from the past to prevent another collapse? Or are we witnessing the construction of another grand sandcastle, as vulnerable as the last, waiting for the next economic tide to test its strength? In the perpetual dance of money and debt, true progress is gauged not by the peaks we scale, but by our resilience in the face of economic shifts. As we look towards the future, let's anchor ourselves in the wisdom of the past, recognizing that the stability of tomorrow hinges on our choices today. If you enjoyed this video, don't forget to hit like, leave a comment, and subscribe for more.